All right. Good morning, everybody. What is today? Today is Tuesday, isn't it? Happy Tuesday. Gonna be a great Tuesday. Hey, good morning, Paul. Hope you guys are doing great. Hope everybody is excited for the day, ready to do some learning. Man, I've been waking up wound up. Good morning, John. Good to see you. Nice to have you back in class. Daniel, Walter, look at this. We have all the usual suspects in here. I love it. Guys, we're going to do what we did yesterday, what we did 2 days before, and what we're going to do for the rest of our lives until we get to where we want to be. We're going to focus on the absolute best of the best. We're going to focus on chart reading, putting ourselves in a position each and every time we pull the trigger on a trade, making sure that advantages are in place. I'm excited to share the journey. I'm excited to help you guys out. I did a little post just above these good mornings. I want you to see it. And the most important one, guys, there's a very clear-cut, step-by-step path to becoming a confident trader ASAP. Post your trades in class. Track your real-time performance spreadsheet. Can't stress this enough, guys. These are the two that when people follow this simple recipe, when they let me look at everything that they do, when they allow me to give them feedback about everything they do, what you find is you become a better trader. You begin to police yourself. You allow me to police you. We really just focus on adherence to the rules and getting that consistency. So don't be afraid to post in the room. Don't be afraid to raise your hand. If you have a question, just throw it out there, guys. I'm 100% interested in answering your questions. I also put a picture up there, how to annotate your charts. When you give me a chart, give me some information. Let me know why you did what you did. And it's not just so that I know what you're doing. What it's doing is it's reinforcing your rules. Good morning, Safia. It's reinforcing that you're following your rules. It's reinforcing that what you're doing fits in to what you're supposed to be doing. And it also lets you know if you find yourself breaking rules. Had somebody yesterday post a picture and they asked me, hey, was this a good entry? So rather than saying, yep, that was a perfect entry, we took their chart, we annotated it together, and we even used a checklist to make sure that rules were being followed. And then it wasn't a matter of me saying, yes, it was a great trade. It was a matter of them being able to say, absolutely, I followed my rules. And that's probably why I ended up winning that one. So we're going to do a lot of that today, guys. Don't be shy with your pictures. Don't be shy with your comments. Let's get as much feedback and participation as possible. But before we do that, we're going to forexfactory.com, guys. We're going to take a look and make sure that there's not some crazy news going on. Today is Tuesday, January 31st. At 8:30 a.m., that employment cost index came in. When it did, it moved the market. I don't know if you were watching it, but there was a good-looking trade that just didn't work out. And what it did is it kind of spiked a little bit. It moved really fast. So it's not that we have a concern about the employment cost index regarding the trades that we'll take or the trades that we'll enter. We have a concern with it and the fact that it may move the market erratically and make it difficult to trade. So at 9 a.m., HPI, S&P Composite coming through. 9:45, the Chicago PMI, which is a medium impact, probably a market mover. And then at 10 a.m., we've got CB Consumer Confidence. And this is a high impact. This one is the one that has the potential not only to spike it, but to spike it for like 20 seconds. It's fun to watch. We'll take our first break. Hey, Jonathan, right around that 10 o'clock time. But put a note on a piece of paper. Have your phone leave you a message saying that news is coming. And then at 10 a.m., we'll put the S&P up. I'll go refill my water, and you guys can watch the fireworks. Good morning, Luciano. Nice to see you today. So news first, guys. Just make it a habit. Charts are loading, look for news. Coffee's brewing, look for news. Make sure you're aware. And then everything that I talk about, guys, we are a 100% no secrets kind of place. from the education page, nexgent3.com/education. There's two sections that I want you to look at. The first one is the software user guide. This is your NinjaTrader how-to. This is, excuse me, if you have a question about Ninja, if you're curious about opening, closing, connecting, scaling your charts, putting in stops and targets, if you want to change the look of your trigger lines, if you want to change the colors, all of that's right in here. If you have a tech question, I always encourage it in the room. Ask me. But if I tell you that I don't know the answer, I'm going to send you to Jason in Tech. He is absolutely amazing, fixes things in a fraction of the time that I can. And really the only thing I've ever seen him not be able to fix is something that's not broken. So all of this is in the software user guide. But guys, I really want to bring attention to the capture software, because this is how you and I are going to have a conversation. I'm running 3 monitors today instead of 2, so if I get confused reaching for things, bear with me for just a second. Screen capture, how to take a picture, how to post it into the chat room, and more importantly, how to get into that spreadsheet as well. So I'm going to minimize the internet real quick. We're going to pull up the S&P live market, and I'm going to click capture on my capture software. If I hover over just my 13.2 chart, it's going to take a picture of only that. So it's important that you show me not only your largest chart, your 13.2, but click and drag and get that 5.1 in there too. Get me those timestamps so that we can line them up. And once you release, it's going to have you capture an image. And when you capture an image, this is where the conversation starts, guys. You can change the colors of your tools here. Maybe you're fond of gold and you want to use these arrows, point out different things. You can take shapes. Maybe you have a question about a specific area. But the most important thing that you can do is use the call out button, guys. And the call out button is how you and I are going to have that conversation. You're going to tell me why you did what you did. You're going to tell me where you got in, why you got in, what your profit target was. And what's going to happen is, one, we're going to see how you're thinking when you're getting into a trade. Are you guessing? Are you following rules? Are you maybe breaking rules that we could talk about and keep you from breaking again later? So the more information you give me, it's really helpful. And then you just have to share it. So there's 2 ways. I can go upload, and it's going to give me a screencast address. And it's going to be screencast.com, a bunch of letters and numbers. There it is. If I copy it, it sticks to my clipboard until I copy something else. So I'm going to come over to the room, and I'm going to paste Control V if you're in the pop out. And now that picture's in the room. Now I'm going to sit on my hands, or I'm going to look for my next trade, and I'm going to wait for that feedback. The other thing you can do is you can just click copy. If you, oops, sorry. Well, there we go. You can take a picture. That's a different picture, but it's okay. You can click copy down here. And when you click copy down there, once again, you can take it straight to that room and just paste it right into the chat. And it'll give you that picture that you can take a look at. That is the first way. You're going to present in the classroom. You're going to get that feedback. The next thing to do is going to be to open up your spreadsheet, guys. And this is provided for you when you download the demo. It's already in your Nexgen Study Picks folder. I also provided a link in the room where you can download it from the website, because this room isn't just for beginners. This room may be for people that are coming back looking for consistency. So maybe you want to start a new spreadsheet. Maybe you really want to go after it. Right click and paste that. Whoops, that was the wrong one. I didn't get a screencast address, did I? We'll just do this. So pop in and post your link right into that spreadsheet. And then once you do that, you're going to go insert and link. And you're going to be able to turn that web address into whatever you want it to be. And I like to put rules met, rules broken, win, lose, whatever you need it to say. Click enter, and now you have a hyperlink that you can go back and you can follow and you can study your pictures each and every day. Every time you take a trade, it should go into this trade tracking sheet. Every time you follow the rules, a picture of you following the rules should go into your Nexgen personal favorite looks. And we're going to use this a little more when we're writing a plan. But if anybody has a question about posting a chart, taking a picture, sharing a picture, annotating what we need to see, what we don't need to see, guys, just use your voice and let me know, and we'll go through it, because I really believe in this path, getting where you want to be through posting in class and through using that spreadsheet. All right, big sip of water, and here we go. The next place to look is the tutorial section. So this tutorial section, this is your foundational approach to learning, guys. And I say foundational approach because you're going to walk before you run. You're going to keep it simple, and simplicity is going to take you where you want to be. This education page, this tutorial page, is mirrored and mimicked in Discord. There's an entire section dedicated to self-training. All of the user guides, that software user guide, the tutorial section, the rules that we discuss. And guys, there's a couple sections dedicated to reading your charts in here. Example trades presented by Nexgen users in the traders room. Any questions, feel free to ask. Prefer that you ask them in the room. But if maybe it's 2 o'clock in the morning, you wake up and you're like, crap, what's divergence? Pop it in the questions thing. We'll find you. Then there's a traders chat room, guys. These are the people that have been using Nexgen for a while. These are our clients. And I want you to notice that their charts may not look like your charts. Their trades may not look like your trades. These are people that have gone through, done the repetitions, done the study, asked for feedback, and they may be in a different spot as you. So I want you to be you. I want you to focus on your path. And your path for the first 30 days, guys. If you are brand new to Nexgen, for the first 30 days, this is your path. If you've been with Nexgen 10 years and you're not making consistent money because you find yourself chasing everything, this is your path. If you've been with us 3 days, 3 years, 6 months, it doesn't matter, guys. This is the best of the best. And focusing on 5-1 trend trades, high probability trend trades, after a termination condition on the 13-2 is going to be the best of the best trade for you, because a high probability trade has each indicator on every chart agreeing for the rules of the trade. Your triggers will be the strongest. Nothing's going to be in your way, and there's going to be no trouble spots between you and your target. Again, 30 days focused on the best of the best is going to do something for you that's going to take you not only to the next level, but it's going to carry you for years. And that's going to be, you're going to learn how to read your charts, guys. Seems silly, right? I want to be a day trader, not a chart reader. Well, 90% of what we do is just reading charts. 90%, guys, literally in a 10-hour day, 9 of it is spent waiting for an advantage. And the rest of it is spent using those advantages for entries and profit targets. And when you learn to read your charts, the mastery incorporates 3 essential elements. You'll be able to open up your software, look at your indicators, and understand where the market is likely to continue. And you'll use that point for an entry for a high probability trend trade. You'll be able to understand where the market is likely to go, and eventually you'll be able to use that, make intelligent choices on profit targets. And then finally, you'll be able to understand where the market is likely to stop. And this is going to allow you to recognize when a trend has the potential to end. It's also going to give you a fantastic anchor point for realizing that high probability trend trade, because an area where the market is likely to stop is what we call a termination condition. And focusing on the 5-1 trend trades that happen after a termination condition is your best chance of success. So without further ado, we're going to get into the high probability trend trade. Guys, I focus on this for the first hour. My demos, I want you to raise your hand tall if you have a question. I want you to post a picture with that question. I want you to give me the opportunity to provide you clarity. But we're going to keep it simple. 2 things to do as you learn the software. The first thing is allow yourself to be a student. Most of us are type A personalities, very successful in whatever venture we've ever done. And we're used to being the guy that answers the questions, not the person, or the gal, excuse me, rather than the person asking. And I know that this is a shift in mentality for a lot of people. Allow yourself to be a student. And then the next thing is keep it simple, guys. Don't overthink it. We're going to stay hyper-focused on one trade for that first 30 days. We're going to learn to read the indicators, and then we're going to take those advantages and start to look for things. And so in the spirit of simplicity, you'll be using 2 charts. Your first chart is going to be a 13-2 chart. And the 13-2 chart is like a broad stroke of a brush. And that broad stroke of a brush is going to give you the general temperature of the market, and you're going to use it with only 1 bar. It's a larger, slower chart. The first thing you'll do is you'll really just be able to understand what direction the market is trending. If the background is green on your 13-2, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. Guys, the first advantage that you're going to provide yourself is the advantage of trading with the trend. Then you're going to be able to recognize your first 2 rules out of 3 for a high probability trend trade on that 13-2. Rules 1 and 2 are going to provide 2 very distinct advantages. We're going to look at both of them, make sure that you're comfortable with it. But the only way that we pull our eyes off that 13-2 is if these rules are met. And then we're going to go to the 5-1, and this is your entry chart. It's a smaller, faster chart. What happens in this 1 bar may happen in 20, 25 bars on the 5-1. And this is where you're going to refine the broad stroke of a brush. You're going to pinpoint your entry where the market is likely to continue. And that's rule number 3 of 3. It's being able to recognize the area where the market is likely to continue and then putting yourself in a position to enter the market there. And when you do that, it's going to allow you to reduce your risk and maximize your profit potential. So 3 rules. We're literally looking at it on 2 charts, and I'm putting these 3 rules right up here in front of you. If you look in the tutorial section, they're a little more verbose. There's a few extra words in there. And I do believe each word is important, but if you're annotating your charts, if you're keeping it simple in your brain, you're simply looking for rule number 1, strong triggers. Rule number 2, no termination conditions. And rule number 3 is where you pinpoint that entry by using a limit order to buy or sell a pullback at an area inside of favorable large triggers. I share this one in the room because I want you to think of 2 things. Your rules should provide an advantage. They should provide a statistical advantage each and every time you get into the market. They should be a set of rules that have been tested extensively, not only by Nexgen, because it's easy for us to test it. We've been doing this forever. I want you to test these rules. I want you to learn to go back, to look at them, to verify, validate, and build trust in them, because each rule provides a very distinct advantage. Those strong triggers will provide you the advantage of momentum each and every time you get into a trade. Those no termination conditions will provide you the advantage of a clear path, making sure that there's nothing between you and your target. And then by using that limit order to buy or sell a pullback at an area inside of those favorable large triggers, you've provided yourself an advantage of an entry where the market is likely to continue. So as important as it is to recognize the advantages, it's important to recognize when you've given away one of those advantages, when you have made the choice to break the rule, and now you're trading without that advantage. And it doesn't necessarily mean that there may not be a trade, but your chart reading will allow you to recognize those advantages. Your chart reading will allow you to recognize problems that may be in the way. And guys, this is going to take you to what's going to be most of your trading, the medium probability trade. Your ability to read indicators, that first 30 days focused on really getting the most out of the read on the indicators, understanding your charts, will lead you to the medium probability trade. And this is defined when most indicators line up for a trade. However, a small issue exists. Your chart reading will allow you to identify that small issue. And this is going to be the vast majority of your trades. And when you're executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your charts allows you to manage assertively. If there's trouble in your way, chart reading allows you to recognize it, and you may take a portion of your position off at that trouble spot and get to a zero loss level ASAP. So while 30 days is focused on the absolute best of the best, your ability to recognize the advantages from the best of the best is going to open up a door for you. It's going to put you in a position to recognize more and more. So we're going to take these 3 rules. I'm going to break them down individually. I will be respectfully asking you if you're good with this, if you're one of my new users, if you're one of my demos, and guys, I know who you are, give me a Y in the room when I ask you if you're good, because I want to make sure that you understand what you're looking at, and I don't want anybody left behind. So the first of 3 rules, thanks guys. First of 3 rules says that we have to have strong triggers, right? No traders left behind. Amen. In an uptrend, when that background is green, strong triggers mean that your small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And it's the space created between the two that lets me know that the odds are favorable for the market to continue up. And you'll hear me reference that in the room a lot. Did you have odds favorable momentum? You might even see me try to confuse you by typing OFM on a chart, odds favorable momentum. In a downtrend, the background is red. The small trigger lines break below, accelerate away from the large trigger lines. It's this space created that lets me know that the odds are favorable for the market to continue down. Rule number 1 gives me the advantage of a strong momentum, of a market where the odds are favorable to continue in the direction of the trend. You're going to focus on this advantage for 30 days, always seeking out and recognizing that advantage, because when those small triggers work their way inside of the large, we call this a weakening of the large triggers. And when those large triggers weaken, anything can happen up or down. So for 30 days, we focus on odds favorable. Ultimately, you may find opportunities and anything can happen. So guys, give me a Y in the room if you're with me. Strong trigger look. We're identifying it here with the understanding that these strong trigger looks don't necessarily last from the beginning to the end of a move. Acceleration until they return. These circles are potential entries for a high probability trend trade. And we're going to focus on this advantage each and every time we look at a chart to make sure we're in that best position. Same thing in a downtrend. Small triggers accelerate until they return. These circles represent that pullback on the 5-1, potential entries for a high probability trend trade. So if we pull up a 13-2 chart, you can see that it's been a bit of a scramble, right? Actually, it's been a lot of a scramble. And probably crude oil or S&P is not going to be my spot to look. So let's do this. Let's only focus on trigger lines for a second. You can do this yourself, guys. This becomes a study tool. I'm going to load a 2 triggers only template. And I want to start building a habit of being able to identify odds favorable momentum. And then when you see one of these tails with odds favorable momentum, I want you guys to go back and study it. This becomes a way to study the best of the best looks. Here you see a tail, but it's anything can happen triggers. Here we see a tail, odds favorable momentum. And this does a couple things for you. This teaches you that you have to be patient. you're not going to have winning trade opportunities every second of every day. There's a point where the market doesn't present a statistical advantage, and it's our job to sit on our hands and wait until it does, because really we're in this to make money. We're not in this to be busy. If you want to be busy, go run a lap, right? Go swimming, play some golf, keep yourself occupied. But guys, each and every one of these circles represents an odds favorable momentum, potential opportunity since midnight last night. So give me a Y in the room if you're with me, guys. Odds favorable, looking for the tails. We're learning to study right now through going backwards. Once we have that odds favorable momentum, we have to make sure that there's nothing in the way. Rule number 2 says no termination conditions, right? We want to give ourselves the advantage of a clear path. Well, termination condition is a Fibonacci-based indicator that may reverse the market. I love that word may, because sometimes these areas are going to break, but we're not willing to give away the advantage of a clear path as a new user. These areas can be blue Fibonacci support. They can be red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line or a magenta divergence high line. It can be a large chart midband if the large triggers are a full bar away. And I'm going to be looking for examples of this one throughout the day. And we're going to talk about all the information that's available with that one. And then finally, I have one that says any third divergence in the same area. This is the one termination condition that I'm going to look for on that 5-1, that smaller, faster chart. Every other one of these lines, I'm looking for on that larger, slower chart, on that 13-2. So to identify a termination condition, I think I have a picture already built for this. And let's do this. 2 things happen. The first thing is price reaches an area. These price bars trend down. You can see that they reach support. When price reaches an area, your job as a new user is to ask yourself, where are the trigger lines? If none of my trigger lines break through this area of support, not the small, not the large, everything remains above, I have a termination condition in place. I have given up the advantage of a clear path. No more short trades into this area. Rule number 2 says wait for an area to break. An area is considered broken. This support is considered broken when both the small and the large get to the other side of the area. At that point, it's game on. We're looking for odds favorable momentum, looking for the rules to be met. So price reaches an area, absolutely nothing goes through. No more trades in the direction of the trend. We've reached an area that may reverse the market. Both the small and the large break through an area. You'll see that support begins to behave as resistance. We consider that area to be broken. Look for your rules to be met for a high probability trend trade. And then we have what's going to be your first medium probability trade opportunity. And I like to discuss this when we talk high probability because it brings into play that odds favorable momentum, those really strong trigger looks. When your small trigger line breaks through this area of support, but your large trigger line hasn't followed yet, this is an area with the potential to break based on the momentum, but it hasn't broken, which means that we don't have a clear path. It's not a high probability trend trade. As you learn to read your charts and gauge advantages just a little bit more, you'll recognize that when you have this area with the potential to break, with that odds favorable momentum, if the conditions are favorable on the 5-1, an opportunity can be taken to go after that trade, to enter that trade short. And there was a trade this morning, actually, that did just that. And I'm going to see if I can find it real quick because I believe it was on John Novak's chart. When we talk about that best of the best entry on a 50-50 trade on an area likely to break, we're talking about small triggers well outside of the large triggers. We're talking about no slowdowns, no divergence, and a tiny little window of opportunity looking for entry. Ideally, for the first 30 days, give yourself that clear path. Give yourself room to the target, odds favorable momentum. Give yourself those advantages that are going to put you in the best position for success. Going to go through a couple pictures, guys. On a 13-2 chart, you can see that price reaches an area of resistance. When you reach that area of resistance, none of your trigger lines have broken through. Because none of your trigger lines have broken through, guys, this is an area likely to stop the market. No more long trades for my high probability trend traders. As price pulls all the way down to this mid-band, all the way down to support, price reaches the area. I ask myself, where are those trigger lines? You can see that they all remain above the area. I can't go short into support either. So no longs, no shorts. What we're watching is a fight between buyers and sellers. 90% of what we do is going to be waiting for those advantages. One area of note is these large triggers don't follow. As price accelerates away from the trigger lines, reaches a Fibonacci area, and those trigger lines remain a full bar away, meaning that, and Elvis, maybe I can put this on yours a little bit, meaning that those large triggers remain above a reversal bar marker on your 13-2. There's room for this entire bar to form before it collides with the triggers. More often than not, price pulls right back to those triggers, helping us identify this as a termination condition even more. And then as price pulls back up, resistance, divergence high, resistance again. Absolutely none of your trigger lines have gone through these areas. And this is what we call a pivot stop out of a divergence high. And when price trades above divergence line and then is back below the magenta line, not looking for any long trades. And if Fibonacci resistance is true, it adds power to the top. This top gives you odds favorable momentum. Fully reverses the market. This is what we will call a strong top, a termination condition that reverses the market and provides you odds favorable momentum. And guys, when you look at your first 30 days, that's the precursor for that high probability trend trade. Focusing on the trades that happen after the termination condition on the 13-2. So we see a strong top there, and now we have what's called a strong bottom. Price accelerates with odds favorable momentum to the downside. You can see that support breaks. All of my trigger lines are below it. I have odds favorable momentum and support that's broken, but price reaches these one-to-ones. When price reaches these one-to-ones, absolutely none of your trigger lines have broken through that area. And this becomes an area that may stop the market. Rule number 2 isn't met. Because rule number 2 isn't met, we're not looking for short trades, even with that odds favorable momentum. Well, this termination condition creates a full reversal. That full reversal gives me odds favorable momentum, and you'll notice that there's one of those tails right there. One of those potential entries for the high probability trend trade. You guys, everything that we do revolves around patterns, the market repeating itself, learning and understanding these patterns. Here's a picture from this morning on the S&P. Price accelerates directly into one-to-ones. Absolutely no trigger lines break through. And you can see how the market behaves. This picture from this morning looks just like this picture from, that's 2021, sometime around September or October. We're going to be focusing on these patterns, recognizing the clear path, understanding when it sets us up for the best of the best. So guys, I'm going to ask, give me a Y in the room if you're with me. Price reaches an area. Where are the trigger lines? This is your recipe for identifying when you have the advantage of a clear path. Sometimes price doesn't make it to an area. Sometimes it seems to turn kind of from the middle of nowhere, right? Rob A., you're asking why I wouldn't circle this tail on the left. I would. But this one is circled in regards to that high probability trend trade, Rob. Notice the termination condition, the full reversal. And more importantly on this picture, do you see how every trigger line has gotten above resistance? We have 100% the advantage of a clear path. Here we do have strong trigger lines, right? Odds favorable momentum. The small trigger lines have broken above the area of support or resistance at the time. The large triggers, the wick to the left of the rightmost circle, right here, because, excuse me, a couple different reasons, Rob. And I like that you're getting a little more advanced. Let's talk about it. So termination condition here, right? It does, doesn't it, Ron? Cool. Price reaches a mid-band. Do you see how these large triggers remain a full bar away? There's a full room for a reversal bar. Awesome. So this mid-band is a termination condition then, until price works its way back up. Yeah, so what happens is we identify this as one of those 50-50 trades. The smalls are above and the larger below, right? The small have turned against it. It's not the best trade for a high probability trend trade, but Rob, this may be a trade that you take eventually. There may be something on a different chart, a different set of conditions that gives you an opportunity. But for the sake of the high probability trend trade, this isn't going to be one of our trades. Baby steps first. Exactly. Let's walk. Don't worry. We're going to run full sprint before it's all over. And then this picture here, Rob, is one of those 50-50s. Smalls above, large below, nothing in the way. This would be a great opportunity for a trade as long as the 5-1 looks great. But we're going to talk about one more termination condition. Then we're going to talk about catching these entries. Sometimes the market changes direction from seemingly nowhere. Everything's working down. The area is broken. And then it decides to go back up. Guys, we don't control that. Those are people with really deep pockets controlling that. Market's going up, odds favorable momentum, and then for whatever reason, it decides to go down. Our next termination condition is going to help us identify that change by using the smaller, faster chart. This is a picture of a 5-1 chart. And I want you to see pivots from the bottom, market goes up. From the top, market goes down. And the thing that is consistent is from the bottom, there's 1, 2, 3 divergences. And a divergence is easy to identify. A negative number will print, and the cyan divergence line from the low or the magenta divergence line from the high. It simply means that when this pivot was formed, there was a loss of momentum. A second pivot is formed, a second loss of momentum. When we get to that third loss of momentum, it may terminate the trend. And it becomes even more powerful. Remember, foundational. Notice that there's anything can happen triggers corresponding with a third loss of momentum. With only one, there's still odds favorable momentum. So we're visually seeing a slowdown. 3 losses of momentum. We go from odds favorable to anything can happen. And then for you guys that like to look at patterns, when that third divergence is higher than the previous or lower than the previous from a high, this is kind of a head and shoulders, and it even adds more powerful to the potential for it to turn. So visually, look at the 3 divergences. It's that look that's going to help you by using a smaller, faster chart, identify change that's happening on the 13-2. So it may push it up for a little bit. It may push it up indefinitely, but you give away the advantage of a clear path with this scenario. And then as you work into that medium probability trade, you can use these losses of momentum on a 5-1 to identify when the short trade that you're in probably isn't going down anymore. So it has 2 parts. If you're not in a trade, you'll begin to recognize trade. If you are in a trade, it's going to provide you a management opportunity. So guys, these are your termination conditions. Rule number 2, notice that everything I talk about comes right from this tutorial section. Everything is there, no secrets. So when the rules are met, odds favorable momentum, clear path, let's pinpoint that entry on our smaller, faster chart. Remember, all we're doing is refining that broad stroke of a brush. We're making sure that we can enter the market where it's most likely to continue. And during the live market, this will be the look of your 5-1 when the 13-2 chart triggers are strong. There's nothing in the way. And this is the moment that you're going to start looking for an entry, but it takes just a level of patience. You're going to focus your attention on the 5-1 large triggers. They should be up, strong, wide, preferably trending one on top of the other. And then you're going to identify the areas that may fall within them. And your areas can be fibs, mid-bands, or 1-to-1s. It can be one on top of the other. It can be one by itself. It can be any combination of the three. But the key is we want them to be inside of these favorable large triggers. Because rule number 1 says that we're going to use a limit order to buy or sell a pullback. It means we're going to wait for the market to come down to us to enter the market. And that pullback begins with a reversal bar. This lets me know that the market has begun that small retracement counter to the underlying trend. I'm going to look once again at my large triggers, up strong, and I'm going to build a window of opportunity. And that window of opportunity is going to go from the highest point of support to the lowest point of support inside of favorable large triggers for a long. Or if we're looking for a short, it's going to be that lowest point of resistance to that highest point of resistance inside of favorable large triggers. At this point, I've got a mid-band, 2 fibs, and 1-to-1s. So my window of opportunity extends from the mid-band to the 1-to-1s, and I'm going to right-click right above that mid-band, a tick or two above the area of support, and I'm going to activate my limit order, and I'm going to patiently wait for the market to come back to me. We have the advantage of momentum. We have the advantage of nothing in the way. And now we have pinpointed with pretty amazing accuracy where the market is likely to continue. So Nexgen users, there's no reason to chase trades. Let it come to you. It's either going to come back or it's not. We don't control that. But if it does come back, you're now long at 79.21 with all the advantages available for that high probability trend trade. So guys, give me a Y in the room if you're with me. Identify your areas, wait for the pullback, activate your order at the highest point of support or the lowest point of resistance. Guys, this is a trade that when you execute, when you follow these rules, when you make sure that you're patient and wait for the best of the best, has been shown to win typically 70 to 80% of the time, is the low end number that I like to do. Rob, almost all futures trading, the people that I've watched over the years, begin with a 12 to 14 tick stop. So we're in crude oil right here. We're into the market. But what we're really doing, Rob, is we're identifying where the market shouldn't go outside of that window of opportunity, right? With all the advantages, with being able to pinpoint where it's likely to continue, we're going to place our initial stop below those 1-to-1s, below the large triggers. Because if it goes beyond that area, we don't want to be in the trade anymore. We've lost the advantage of entering where the market is likely to continue. And sometimes, guys, anything that wins 70 to 80% of the time is mathematically obligated to be wrong 20 to 30% of the time, right? So, Rob, initial stop where the market shouldn't go. And then once that market begins to move in the direction of the trend, you can reduce your risk. You can pull that stop up below the pivot. Because you waited for the pullback to the best of the best area, you've increased your profit potential and you've been able to reduce your risk. Guys, this is your best of the best. This is your highest probability trend trade. This is the one that we're going to focus on initially, that we're going to write a plan to make sure that we can find it. I want to go back to this chart where we had circled some stuff. And let's put indicators on it. Let's get our fibs, our mid bands, our 1-to-1s. And let's see if any of these had the advantage of a clear path. And honestly, maybe only one. You'll notice here, price reaches resistance. None of the trigger lines had broken through. Little pre-market action. There is the tail, but because of the termination condition, we're probably not looking for that trade. Once again, reaching areas, triggers don't break. We're going to look at these tails and see if they fit the rules, but rule number 2 isn't in play. So let's get both charts up, and let's just look at circles for the sake of looking for circles, for the sake of seeing what they look like, even with the rules not met, because the patterns may be true, but it doesn't mean that your rules are met 100%. Both of these circles on this crude oil chart right around 9-ish, right at the open, small triggers outside of the large, everything's up, and it pulls right back to support inside, and then it does it a second time. This isn't a high probability trend trade, but what this is being able to recognize that the market came from a termination condition, gave you a full reversal. Good morning, Ed. Provided that amazing momentum as it comes through. There's going to be a point in your trading career where this may be your trade. If this is your first 30 days, trading on hope rarely works because you don't have the ability to read everything fast enough to know whether or not there is an advantage present. As we scroll back to the next circle, it's the same pattern. This time it's no divergence as it pulls back to an area of support inside of favorable large triggers. A much better look as it's coming back. And once again, support is held, multiple divergences in the same location, odds favorable. So you can use this tool not only to recognize your best of the best entries. And guys, here's one that fits the rules 100%. And I'm going to take a picture of this, because this is your study, right? This is how you're going to figure out the best of the best. When the rules are met on the 13-2, odds favorable, no termination conditions, and this is one of those 50-50 trades, right? A little medium probability. But look at the momentum as the trigger lines are breaking through the area. It means that if the entry on my 5-1 looks great, and when I say looks great for a 50-50, it means that there's no divergence present, no slowdown. It means that I have odds favorable momentum, and then it also means that I have a small window of opportunity. This is a medium probability trade with high probability results. If you got in right here around 76, 78 or so, that market didn't even blink until 76.55. It gives you 20 to 30 potential points for ticks for profit, close to $300. So guys, this is how you're going to study. You're going to go back on your 13-2. You're going to recognize the absolute best of the best, guys. Odds favorable. Price hadn't reached that key Fibonacci area yet, and it pulls right back to support inside of favorable large triggers. This is going to happen all day, every day. And you're going to see it happen over and over. Your job is to do that study. Your job is to scroll back and look for those tails on the 13-2, to go back and identify termination conditions on the 13-2. And if rules 1 and 2 are met, circle that tail. Guys, you're not trading tails. You're trading pullbacks to areas of support or resistance inside of favorable large triggers. But when the rules are met, when the tail is circled, if it lines up with the area of support inside, you now have a high probability trend trade. So guys, once again, I'm going to ask, give me a why in the room if you're with me. What we're looking for, how we enter, and then how you can study. And guys, study is a key part. Go back and take 1,000 pictures. Put all 1,000 of those pictures, rules met, into your spreadsheet so you can study it. And most importantly, put those pictures into the classroom so we can talk about it and make sure that you're seeing what you should be seeing. All right, guys, so there's your rules. How are you going to follow those rules for 30 days? You're going to follow those rules by writing a plan. Or even easier, you're going to steal, let's not say steal, you're going to liberate this plan that I've provided. And this is an example of how to write your plan. Guys, I'm not going to lie, there's a lot of people that just use it. That's up to you. But change it and personalize it. My trade is the high probability trend trade. I'm defining the entry of my trade, and that's all that I'm defining is how to get in. I know that when this checklist is met, this is a trade that typically wins 70 to 80% of the time. Guys, I'm not going to lie to you. I've had an awful lot of people follow this checklist to the letter for 5-7 days, and they're usually in the 90s. But I'd rather say 70 because you can still make money at 70, right? Is the market coming from a termination condition that creates a full reversal? If you can click yes, you're in that 70 to 80% setup. If you click no, it can still be a great trade. That termination condition increases the likelihood, but it's not mandatory. If your checklist is met, odds favorable, no termination conditions, area for entry, guys, you're putting yourself on the path for success. You're giving yourself these advantages, making sure that you have what you need. I'm going to give you one of those checklists in the room. Here it is right here. Download it. Print that out. Set it on your desktop. Police yourself every time. Every time you take a trade, make sure that it lines up with that checklist. You can't practice the wrong trades. I'm also going to give you a checklist. But this checklist goes one better. It doesn't only talk about the rules. This checklist is going to have the rules and then pictures straight out of the user manual for what you're looking for each of those rules to be met. So guys, steal both of these. Use them. This is your entry. Take those pictures of the perfect entry through study. Put a couple in your plan. Make sure you can identify it. This is it. This is your initial plan. This is your 30-day plan. After 30 days, when you begin to add those 50-50 trades, that medium probability trade, you have to modify the plan. So we'll call this one situational exceptions. On 50-50 trades, initially, no divergence will be present on the 5-1, guys. And it seems like, oh, but Mark, there's going to be times. Well, there are going to be times. But more often than not, divergence on a 50-50 trade, if you don't have the confidence to read your indicators, look at multiple charts to determine advantages, they're going to fail. So this is your safeguard. Small triggers must be outside of the large for that entry. And once again, taking pictures. What does that perfect 50-50 look like for me? Odds favorable, area likely to break, no divergence, strong triggers, tiny little window of opportunity. Take that trade all day long. Notice what happens when the 50-50s begin to print. Ultimately, the market changes direction. So remember, we're going to start conservative. We're going to start small. There's your first two opportunities. Your first 30 days is dedicated to finding the best of the best entry, right? It's not about hitting home runs. It's not about pumping up your P&L to boost your ego. It's about understanding the advantages and learning how to enter the market. Once you do that, you're going to have to clearly define a management plan. The one on this example plan is the absolute most mechanical approach to management that you'll ever see. It leaves no room for opinion, no room for hope, for fear, for anxiety. It's simply trade two contracts, stop below the window, stop below the reversal bar in the direction of the trade. Mechanical. First contract profits at 100, go break even. Second contract's at 200, guys. All this is looking for off that best of the best entry is $300 in a $200 move. You're probably going to hit an awful lot of $100 in break evens, but that's where the spreadsheet comes in. Every time you take the perfect trend trade with the perfect entry, that picture is going to act as an ability to teach you to manage it better, to manage with momentum, to manage through divergences. So you're in this constant state of annotation. Here's my perfect entry. Well, here's a picture of when I can hold for bigger moves. When I have that odds favorable momentum, when there's nothing in the way, my indicators tell me that the market is likely to continue. And this is how I'll begin to take trades further in the direction. So guys, that is it for the first hour. We have news in 5 minutes. What have we covered so far? We've talked about the advantages to get you in a high probability trend trade. We've talked about creating your plan so that you can be rigid. I'm going to get rid of this, and I'm going to post that example plan in the room. Guys, I invite you, send me your plans. I will look at it. I will offer my feedback. Nothing that I say is the absolute gospel, guys. Trading is a solo sport, and ultimately you have to do what's best for you. The plan is yours. The plan is not mine. But I'll offer my feedback, and if I know your plan, I can help keep you accountable. Whoops, I think I just deleted a chart. Nope, I didn't. 2 charts, 3 rules. 2 charts, 3 rules. So guys, we have news coming up in about 4 minutes. I'm going to leave these up, make sure that they're scaled the way they need to go. When I come back, we're going to start looking at your charts. We're going to start looking at what you did. But before I go, I want you to see something. 50-50 trade, right? 1 divergence, 2 divergence. Look how far it pushes past the window of opportunity. Just saying. Keep it conservative at the beginning. Give yourself the advantages, the best of the best. And don't worry, guys. Eventually, you're going to get exactly where you want to be. So let's watch news. I'm going to go refill my water real quick. Guys, I'll be back in just a second. If you take a trade, post it in the room. If you have a question, post it in the room. I'll be back in about 4 or 5 minutes right after news, and we'll continue. We'll start studying your charts. Back in a second. All right, guys, there's news. Not too crazy. We'll give it a second just to make sure. It's 10 a.m. on the dot. Sometimes it may spike, sometimes it may not. But that awareness, knowing when news is happening, helps us out a lot. Guys, I'm going to start scrolling through. I'm going to start looking at the charts that you guys have posted. We're going to do some chart reading. We're going to talk about what you see. We're going to talk about the rules. I'm going to give you guys the reminder. Every time you post a chart, if you'll do me a favor and give me the absolute best information possible, let me know what you're looking at. Let me know why you're getting in. Let me know why you're getting out. It helps me an awful lot in giving you feedback. And more importantly, it helps you stay on top of your rules. So we're going to start. John Novak said good morning at 6:56. And he said these are the exact same Fibonacci line, but very different triggers, guys. And I think that this is a great opportunity just from chart reading. One is support. Everything breaks. And that Fibonacci holds for continuation down. Now we're trading into it as resistance, and all the trigger lines are below. Nexgen users, you have the advantage and the ability to recognize these areas. This started printing long before the market ever got there, and you have the opportunity to not only recognize when an area is likely to hold, odds favorable momentum gives you an indication of when it has the potential to break, and then visualizing with those trigger lines breaking, you can not only recognize that it's broken, but you can use that next set of Fibonacci areas for potential profits. So big fan. Just chart reading, right? Once again, termination condition. When not to take that short. When you've given up that path, that clear path. Gary posts, this was one from this morning. This was the 50-50 look, no divergence. Identifying advantages. Everything says strong. It's coming from a termination condition. There used to be this old saying, strong triggers break things. And you'll see it a lot, but you still need rules met. Everything was up. The smalls were above. No divergence. Strong triggers. Tiny window of opportunity. And it gave an opportunity to make a little money to the upside. In the moment, sometimes these look like termination conditions. You'll have to continue the repetitions. Even if you don't take the trade, identify the conditions, annotate your charts, put yourself in a position where you can begin to catch those opportunities as your trading plan progresses. Great picture from John. He's a firm believer. If there's no divergence on the 5-1 and it's a 50-50 on the 13-2 and everything says go, to manage assertively, just like the manual says about those medium probability trades. And he adds that you have to have context, right? Is it a great bottom? Is it a termination condition that created that full reversal? We know that it creates an advantage. Is it honestly odds favorable momentum? Or are you right at the tail end and you're hoping that that weak momentum pulls you through an area that hasn't broken? All that time that you spend on the high probability trend trade is going to make this chart reading almost instantaneous. And John says this is the trigger line Fibonacci trap for new users. New users think sell red lines if triggers are down. This is from a 21-3 yesterday versus today. The left has triggers that support more down. The right has triggers and divergence that support fibs breaking to the upside, which they did. So again, context. Notice the difference. Odds favorable, anything can happen. Those same foundational basics play their way into it. And he adds that the basics are awesome and all you need to do is some trend trades. But to be elite, you'll need to really spend a lot of time on chart reading. Remember, 90% is spent trying to find that trade. 10% is taking those advantages. And now that we've gotten through rules a little bit, let's go back to Discord. There's an entire section dedicated to chart reading. This is updated almost daily from John Novak from things he sees in the live market. Talking about trigger line location. Smalls are breaking below, the large stay above, the large stay above. Keeping yourself safe, keeping yourself out of trades because you don't have advantages can sometimes be just as important as making sure that you don't miss the trades when the advantages are there. So, guys, go through the chart reading section in Discord. There's chart reading, and then as you advance, there's advanced chart reading. In any one of these pictures, feel free to post them in the room with a question attached if you need a little help with what it's saying. All right, Gary posted a chart. Just a little chart reading there. Keeping himself busy rather than taking trades. No areas to trade from. Reversal bar with no rules met really doesn't mean anything. So good job, Gary. All right, guys. A lot of posts from John Novak, right? You guys should be trying to outdo him. He's got 30,000 pictures. There's that same one. No shorts yet. Everything's up. It'll probably go test the highs usually. He made that picture. And then Nostradamus himself, easy to see after the fact. The more you study it, the quicker you'll get in sync with being able to recognize these things. And guys, I want to remind you that these charts aren't only for the person that posted it. These charts are available 100% for questions and feedback from any one of you. If you have a question about it. Gary, you have odds favorable on the 13-2. You're saying a loss of momentum on the 5-1, but your smalls are well outside of your large coming down to that area. You also have strong triggers to the upside here. I don't see the loss of momentum that you're talking about there. So let's go back to the rules. When we talk about momentum, when the small remain outside, we have momentum. It's when they work their way back into those trigger lines that we see things slowing down. And you have odds favorable momentum on 3 charts in this particular picture. Paul, let's see what's going on. Paul, you've got a great top on the 13-2, full reversal. Trigger lines roll, no divergence. That's that momentum one. I love it, guys. It's a community. Paul put in there. Hopefully Claire caught this one. That's Claire straight, isn't it? What a great setup. If this is really going to be a good top, these triggers are going to roll. As they're rolling, there's a momentum opportunity to the downside. Paul, that's great chart reading. That'll be one of those ones that adds its way into your plan eventually for sure. Gary with another no trade picture. Good top, you said yes. Gary's using a checklist. Reaches a termination condition on the 13-2. Chooses not to take the trade. Respecting the termination conditions. I like it. All right, John C., let's see what you did. John C. asking, any trades in here short? Well, let's take a look. Let me see if I can get enough going on here. All right. Are you with me, John C.? One of the most common questions, hey, are there any trades here? Let's find out. Let's put that high probability trend trade checklist on it. All right, let's see where we're at. So as we're coming off the top, the first thing we're checking is trigger lines, right? Was it coming from a good top or bottom? We can't tell because we're at the very top. Small triggers are through, large triggers are below. We're not really coming from a good top or bottom here because we haven't had a full reversal. The large triggers are still green. Do I have odds favorable momentum on the 13-2? Well, I guess it depends on which direction you want to go. Right here, I have odds favorable momentum to the upside. It's not until down here that I have odds favorable momentum to the short side. Does that make sense, John? So right now we're looking at the time over here. Large triggers are still up. Large triggers are still up. Everything is still kind of leaning a little bit. This is early. So we don't have odds favorable momentum. Smalls are above, large are below. We should just stop right there if we're looking for high probability trend trade. Once there's not momentum, it's no trade. But let's talk about it though. There's no termination conditions below us. But then we get into, is there an area for entry inside of favorable large triggers? Well, if I'm looking for shorts, my large triggers need to be down and really angled in the direction of the trade. We'll turn these into large triggers real quick. And then my area is going to be right inside, right? Looking for those shorts. So from a high probability trend trade standpoint, John, there was no trade to be had. Waiting for that market to settle down a little bit, waiting for it to make a decision on the direction. Eventually, this may be your trade right here. But in the beginning, really focusing on that best of the best, giving yourself the advantages of momentum, of a clear path, making sure that everything is facing the same direction. You too, Elvis. That's where your advantages are going to come into play. Great picture, great question. And I think one of the points I wanted to make is get in the habit of using that checklist each and every trade. Now, the software won't keep you out of bad trades, John. You have to keep you out of bad trades. And that really boils down. Sorry, let me give you the Sunday school answer. There's two options. There's rules met and there's rules not met, right? So all we have to do is just keep focusing on the rules, learning when we have the advantages. And then we get into that chart reading thing where you get into rules not met, but I know them so well that I'll break them. And that's usually what gets people in trouble. You begin to get so comfortable with your rules that you stop following them. Back when I was training managers, every manager was absolutely brilliant for 30 days because I gave them a checklist, because I gave them everything they needed to be successful, and they followed it and they did great and they made me proud. And then they got smarter than the checklist, and most of them started making pretty big mistakes, and it becomes really challenging. It's just human nature. It's not anything negative about anybody, but human nature has us striving to be smart, especially in front of an audience. Paul, those are indetermination conditions, and you said to yourself, I'm not taking trades in determination conditions. I like it, giving yourself the best chance of success. And then on that 50-50, smalls are moving inside, a couple divergences. You're just going to sit on your hands and wait. I love it. Great rules-based. Great rules following, Paul. And then you wait for it to clear and it doesn't reach that best spot yet. Missed your entry a little bit, right? Well, actually missed your entry quite a bit. In late, but your risk is established. Quick profits, take it out at the next. Great patience. And I like it because, well, you ended up taking the 50-50 anyway. Shenanigans, right? No, that was a different 50-50. Maybe not. There's the 50-50. Everything's slowing. And I believe that's the same chart. Pushes all the way down, then comes up, gives you the opportunity. This one hadn't reached the area, right? And the other one was at 50-50. Look, nice trading, Paul. And then using your rules, using Nexgen to identify consolidation to keep you out of those choppy markets. That's it, Ron. Learn the rules like a scholar before you can break them like an artist. I love that one. I love it. Paul's been sitting in this classroom for a while. Notice that he puts holding pattern. He's using his 13-2 chart. Guys, you have the advantage of Nexgen, Fibs. You have the advantage of rules. 50-50 with divergence, not looking for longs. That was a 50-50. The short didn't work. And then Paul notices resistance holds, support holds, resistance holds, support holds. Now he doesn't have any rules met. Those rules keep him out of the chop, and he's saying to himself, let it break. Let it break before I look for an opportunity, because that advantage of a clear path is on vacation. It's just not there anymore. Great chart reading, Paul. And it's just that natural progression, isn't it? Joel, coming from a termination condition, you're at the tail end of odds favorable momentum, the smaller outside of the large on every chart that you have, and it pulls right back to a stacked area of support inside of favorable large triggers. And Joel, you make money all the way up to the fib. I love it. Can I ask you guys a question? If you catch, that's 15, that is 18. If you can catch $300 3 times a day, do you need more trades? If you can catch $300 once a day on a 10 lot, do you need more trades? And this goes back to, I had someone ask me yesterday, hey, I just want something simple. I want something focused. Everybody says that they want something simple, that they want something focused. Guys, this is as simple and focused as it gets. It really is. Doesn't it make sense as a new user to commit to that 30 days? Doesn't it make sense as somebody that wants to be profitable more than they're not, to have advantages more than disadvantages? Doesn't it make sense to embrace that? Give it 30 days, guys. 30 days is going to happen no matter what, isn't it? Joel, if you scroll back over the last 6 months, you probably have 100 of these trades, right? And probably 80 of them won. And then if you look at all the other ones, all the other hopes, the fears, the wishing, that's where we all go a little bit sideways. So Joel, great job on that trade. What a great looking trade. I like everything about it. I would take this trade 1,000 out of 1,000 times because of the advantages. Paul. 1 hour of nothing. I love it. Great recognition. Paul, you took the first shot coming from the good top and then just recognized, it's got to break. 1 hour of nothing. How about this, Paul? 1 hour of not losing money. 1 hour of not hoping. 1 hour of not trading in determination conditions. 1 hour of not giving away advantages. I love it. I love everything about it. Keep doing it. Guys, it costs absolutely nothing to be flat. Nothing. Gary, consolidation. That's it, guys. Consolidation. No advantage. Once again, guys, rules and fibs. No trade. 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 No rules met. That's all it is. Simplify it. Either your rules are met or they're not, right? If they're met, take that trade without hesitation. If they're not met, stay out of the market. Paul says, good top, right to the good bottom. Large triggers don't follow. So Paul doesn't get suckered into a short right here. Every trigger agrees. No divergence potential. And he knows exactly where he wants to get into that market. $50-50 trade, right? Small's above the large, but the large are wide. Half of my triggers are through a magenta high. Half of my triggers are through resistance, which means that this area has the potential but has not broken. Is everybody with me on that? Divergence prints on that 50-50 trade. What does your plan say about it? If you're taking that super conservative approach, your plan probably says, well, divergence keeps me out of this trade, but I'm going to take a picture and I'm going to look at it and I'm going to assess it and I'm going to learn it over and over and over again. If you're a 2-trade guy, if you're super conservative, that initial example plan, there's not an opportunity for you here. But there is an opportunity for education. So I won't worry about that 50-50 trade right now. And I'm going to take a picture of the 13-2. And I want to talk about the gap theory, guys. I want to talk about when price accelerates away from those synthetic triggers. You're going to see it on every chart. We identify it for termination conditions on the 13-2. If price pulls away from those triggers too fast and too far into a Fibonacci area, it then snaps back to the triggers. It's like a slingshot. And then we have this picture that I just took from the 13-2. Price accelerates all the way down to support, to the mid-band, to 1-to-1s, to support, right? And those large triggers remain a full bar away. Those large triggers leave the market room to make a reversal bar before they would come in contact with them. This area behaves like a vacuum. There's like a sucking noise as price snaps back to those large triggers. Any short trades in this window typically get run over. This is just chart reading. It doesn't mean go long. Because do you go long here, 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 here? Hell, I don't know. You don't have to guess. It doesn't mean you're going long, but it means that if you can eliminate that one hopeful short trade, that's money in the bank, right? Every poor trade that you eliminate allows your winners to do more. So that's your gap theory. Take this picture, steal it. I'm going to give you the screencast link for it. And I'm just going to post it right in the room for you. That's a good one in the room. You're looking at it. You're great. But guys, go to your spreadsheet. Paste it in there, right? Make it a link. And call it gap theory. And now what you can do is you can come back and you can study that gap theory. And you can continue your ability to read your indicators, to understand expectations, and then to look for opportunities based on the expectations. Here's that 50-50, right? Guessing Paul took the perfect entry. He says, I've got enough going on here that I'm willing to take that trade. His market flow chart. Oh, Paul, you didn't have divergence. There you go. Nice. Then let's use Paul's for an example. I love this. Termination condition creates a full reversal, provides odds favorable momentum breaking through the area. No divergence with strong triggers. Paul takes a perfect entry right at the area of support inside of favorable large triggers. And then for you guys that are running that 8-range chart, look at the momentum on the 8-range chart. It's huge. And he gets a reversal bar. But remember, it's still a medium probability trade, right? Which means that it's managed assertively. And it's not a medium probability trade because of the divergence, though. It's a medium probability trade because the areas haven't yet broken. You've identified your first trouble spot, which would be that divergence high right at 55. At that point, a lot of traders will make the decision. I'll either go break even, or if another divergence prints, perhaps I'll manage out. So far, no divergence is printed. But the momentum on the 13.2 suggests that it really wants to get to that fib. So guys, there's a pretty good walkthrough of taking a trade. This is your first medium probability. Paul didn't have divergence, so I love everything about his trade. Odds favorable, termination conditions, strong triggers, tight window of opportunity. Nice trade, Paul. And now we have a second divergence. Small triggers have worked inside of a large. We're witnessing change happening a little bit on that 5-1. Great trade, Paul. Nice job. How many advantages did Paul have? Guys, I love talking about advantages. Let me get a smaller picture here. These are the things that go through my head as I get into a trade. Starting on the 13.2. Where are my advantages? Well, we'll start. The market says I'm in an uptrend. That's an advantage. I have 3 areas of support in a mid-band that just held and gave me a full reversal. That's an advantage. I've got small triggers above the large triggers. Clear advantage. I've got strong triggers. I've got trend. I've got large triggers trending. I've got a tiny window of opportunity. All these advantages. I've got strong triggers. I've got everything going up. I've got no fib. I mean, guys, this 3, 7, 10 plus advantages, right? Does everybody see it? What's my one disadvantage? I've got a red line with the potential to break. I don't know. Did you pay extra? Me either. Possibly corrupt data. Possibly. The market likes you today. So guys, do you see it? As you grow with the software, you're going to get into this mindset where you're like, you know what? I'm going to start counting advantages and I'm going to recognize disadvantages. And this is going to help me determine later in life whether or not I'm willing to take this shot on a 50-50. So it's a progression. It is rules-based. It's advantage-based. And you're just really looking for opportunities. You're looking to understand when you've got the best of the best. So right now on the S&P, guys, you're trading directly into a termination condition. But what do your large triggers say? Still a lot of pressure to the upside, right? You're looking at your NinjaTrader and it looks nothing like what you're seeing in the live stream. Cosmo, will you show me a picture of your NinjaTrader? Can you do that? Let's make sure that we're looking at the same chart. Let's make sure that we're looking at the same time frames. But we will get you squared away. No worries at all. We'll make sure that you're connected. So yeah, if you'll just grab me one big picture, we'll take a look, Cosmo. And guys, you can always do this in the room. Rob A, right here. Cool. So this is what we call a reversal bar marker. And we see it on both charts. On the smaller chart, it's just this is where this bar will become a reversal bar. It's literally the price marker. Here at 40.49, that'll be the spot where if this decides to go down, then we would have a reversal bar. So it's called a reversal bar marker. The way Nexgen users use it the most, there was one on the 13.2 at 40.50 and then it went away. Well, because when the next bar prints, the reversal bar marker changes. So it's on the most current bar. So if this comes down and hits this reversal bar, watch what happens. Hopefully it will. It may not. This market's pushing up a little bit. Or when this bar finishes printing, this reversal bar marker will adjust as well. I like to use it when we talk about that gap theory. When price accelerates away, this is that white reversal bar marker on the 13.2, Rob, and everyone else will help you identify the room that you have back to the large triggers. If price reaches these areas and your reversal bar marker, let's pull this over. Price reaches all of these areas, and this is your reversal bar marker, the large triggers remain above it, price is more than likely going to snap back and hit those large triggers. On that same token, if the large triggers are already through the reversal bar marker, it just kind of helps you anticipate more down. So the first time I'll use it is when price reaches an area and I'm gauging whether or not those trigger lines are likely to come back. Here's a good one. Price accelerates away, the large triggers don't follow. Reversal bar marker would have been right here towards the bottom. Looking for another good mid-band opportunity, but doesn't seem to be a lot of them this morning. Price reaches that area of support. Large triggers are a full bar away. Price snaps right back. You can use that reversal bar marker real time to help you determine and gauge the distance. Gary, let's see what you did, bud. Divergence on a 50-50. You said no trade. Entry would have been there on market flow. Giving up 8 to 10 ticks is too much. That's a pretty healthy price for confirmation, isn't it? Cosmo, are you with me? I want to make sure you're up to speed, my friend. Type in the room for me. What market are you watching? It said it uploaded. I'm not... What uploaded? A picture for me? Mini S&P. Make sure. Did you post it into this room? No worries. So when are you using Snagit or are you using Capture? And I am so glad to help on this one. So we'll get you squared away. I'm going to pull up my TechSmith Capture real quick. Awesome. I'm going to try and pull up my TechSmith Capture. Let me see where it went to. I'm going to close all the windows. It got lost somewhere in there. Let me try it again real quick. Get my TechSmith Capture up, Cosmo, and then we're just going to take a picture. And it looks like my capture is struggling, but it's the same process on Snagit. So let me pull up Snagit. Because it's ultimately this big red button. Capture the picture. And then once you get it, you're going to hit in the bottom right-hand corner, upload. And I don't know why my capture software is refusing to come up right now. But you're going to click upload and it's going to give you a screencast address. Or maybe, yeah, it's upload. It's a blue button in the bottom right-hand corner. And it's going to provide you that address. And once it provides you that screencast address, you can come over to the message board and you can paste it right here. You can also click the copy button and then just come over and paste it right into the message board. If you want to try that real quick, I'll see if I can troubleshoot my capture software. But if you're looking at the S&P Mini and you're saying that we look completely different, are you watching on YouTube, Cosmo, or are you watching the live stream here? That's probably going to be our first thing to take a look at. Okay, you are watching live. Great. And we don't look anything the same? No worries. I'll be here. Gary, you said more consolidation on the ES just a little bit ago. Definitely trading into areas, using those key areas to understand when you have the advantage and when you don't. Big fan of that. See what our friends at Crude Oil are doing. There's Paul's trade. That was kind of your second chance if you wanted to let the areas clear, right? And up it goes. If you didn't care for the first trade, the area is cleared. Those large triggers got up above it. We didn't reach the next area of resistance. And it heads the other way. Cosmo, how we doing? If you want Cosmo, I'm a big fan of this fella. Jason over there in tech can always give you a hand too. He can take a look at what your screen's doing, what it's not doing, what the software's doing. Sometimes there's a couple different things, making sure that we're on the same market. This is crude. I'll go to the S&P. Once we're sure. Okay, so sign into capture. You should have created a screencast account as well, right? So, and who's your salesperson, Cosmo? Cameron? Cool. I'm going to have Cameron reach out to you and help you out if he's not on the phone as well. But if you go to techsmith.com, Jing tool, this gets you to the capture. And there's two things that happen. When you downloaded the software, Cosmo, it had you download the capture. And then capture works with screencast. And screencast is what it's asking you to sign in for, because screencast is what's going to take that picture and upload it to the cloud. And once you have screencast in play, let's see if I can get mine up, and you're signed into it, everything that you upload gets uploaded into this cloud. You can go back and you can study and you can look at it. And then from this cloud even, you can share. And it provides that URL, and I can take that URL and post it right in the class. So if you're not signed into Screencast just yet, that may be the challenge that we're working on. No worries. Will you do me a favor? And I know it feels like asking for directions. There's nothing more important than you being able to take a picture. Do me a favor and just start a ticket with Jason. Let him jump in, get you squared away. It'll take him 3 minutes. We'll have you right back into the education process. Or you can reach out to Cameron. And Cameron will be able to help you as well. And I just sent Cameron a message as well. So we're going to pull out the cavalry on you, Cosmo. Make sure that you're taken care of. But since I can't see your computer from where I'm sitting, I'm going to have either Jason or Cameron get you 100% squared away. But while you're looking at your charts, is there a white arrow in the upper right-hand corner? Sometimes charts get pushed out of the way. Sometimes they get scaled a little weird. If you're not seeing everything on a chart, you can click the capital F in the upper right-hand corner, and it'll bring you back to center. And then if you don't see the most current bar highlighted in black, you can click this white arrow, and it'll bring you to the most current bar. I've done that. I've sent my brother a message saying, dude, my 5-1 stopped working. And he's like, click the arrow. And I had no idea. And when I first started, if I opened up and my charts looked like this, I would sit and scroll just like this until I finally got back, when all I had to do was click the F. So let me know if one of those works. If not, I've sent a message to Cameron. Get a tech ticket with Jason. Let's get you squared away, though. Taking pictures is a big deal. I want to make sure that you're able to do it. There is no capital F, so you're probably centered. Do you have a black highlighted bar? Most current bar? That would be the second thing to look for. Make sure that there's not that white arrow. All right. Let me know what Cameron says. Let me know what Jason says. Worst case scenario, I'll catch you after class and see what I can do. That's okay. So Cosmo, there's a point where we just have to put our hands in the air because I can't fix it right in class. Lame. No, it's not lame. Everything's lame until you learn how to use it, right? You're just learning how to use it. No worries. Head down to tech. Let Jason take care of you. It'd be like running out of gas and thinking that your car sucks. It doesn't. You just got to figure out what's going on, right? So let Jason get you squared away. Let Cameron get you squared away. And then we will make sure that you're taken care of on the education side here. Probably one simple thing. Cool, cool. So guys, what do we see? Smalls are up, large are up, but we don't have odds favorable momentum. Every trigger line is above this area of support. Every trigger line is above this area of support. Guys, we have the advantage of direction. We have the advantage of support based on our termination conditions. This area is likely to hold, isn't it? When price pulled back to support and every trigger line is above that area. Are you guys with me on this? That's an area likely to stop the market to the upside. So we're gauging advantages once again. Large triggers are up. Synthetic triggers are up. Smalls are outside of the large and synthetic, and it pulls right back to support. If you decided to enter this market at 52, you're 3 points in as we go back to that first trouble spot, right? Back to that potential divergence. 13.2 is beginning to build steam. Small triggers are up now on the 5-1. Do you see how we're just talking through? Small beginning to break above the large. So we're identifying areas likely to hold, likely to stop the market. We're identifying where the market is likely to continue. And now if we end up with odds favorable momentum, can we identify where that market is likely to go? Simple processes. Starting on the 13.2, what's it telling me? And then if it's not a high probability trend trade, you're going to start working to that next level where you begin looking at everything. Now everything says up, everything says up. Just kind of looking for those opportunities. This is what I do every day, guys. When I open my charts, I never ask myself, do I have a trade? I ask myself, do I have momentum? And if I do, then I ask myself, do I have termination conditions? And if I don't, then I ask myself, do I have an area for entry inside of favorable large triggers? Because that's my recipe for success. That's the trading plan that I've committed to. That's the one that's getting me where I want to be. And that's the one that is teaching me to recognize my indicators, to read my charts, and to begin to understand advantages as they present themselves, even when those high probability trend trade rules haven't been met completely. Then Gary, great job on following your rules. And what I do whenever people, whenever people tell me I haven't had a trade, hey Mark, there's absolutely no trades. Guys, I like you to go back and I want you to begin circling. That was a 50-50. What did it look like on the 5-1? Did it fit your rules? That was a 50-50. Did it fit your rules on the 5-1? That was a 50-50. Did it fit your rules on the 5-1? And you'll start going back. Guys, a lot of consolidation there in crude oil, right? That was a 50-50. Did it fit your rules on the 5-1? So Gary, if an edge trade isn't your trade, then it doesn't matter about that one, right? But go back and study. Guys, this happens all the time. People are like, man, I can't make any money. I didn't see any trades. And Gary, I'm not saying that this was you today. But it's been me where I'm like, there were zero opportunities. And then John Novak says, well, go back and do your study. Go back and see. Was there an opportunity? Let's see, at 7 a.m. on that 50-50, I'm going to scroll back. Ooh, I just got rid of it, huh? I'm going to scroll back to the circles. Well, there was one. What did this look like at 10:17? At 10:17, we had two 50-50s with no divergence on a pullback. Gary, this one, if you're looking for trades based on how quickly you can get them done and get to the end of a combine, that's it. Gary, did this one fit your rules? No divergence, 50-50, strong triggers, good bottom, strong triggers, window of opportunity. And the reality is sometimes we go to the bathroom. Sometimes we get a cup of coffee. Sometimes the phone rings. But Gary, I know you're playing well enough that this is a Gary 60172 rules met trade, right? And Claire, thank you for that. That's nice of you. I appreciate that. We do love what we do here, guys. So Gary, there's one opportunity. Hindsight is always 20/20. But I think that if you go through the study and give yourself the benefit of hindsight, aren't you going to see this set up again? Gary, 50-50, no divergence, window of opportunity. There's another opportunity. It's okay to miss trades, guys. It's okay to not take trades. It's okay to talk yourself out of trades. But when the emotion is gone, right? When the heat of the battle is over, when the dust is settling and you don't have an emotional attachment to the P&L, all you're doing is studying, can't you go back and with a clear head and no adrenaline, say to yourself, man, I had this beautiful termination, everything held, tons of momentum, smalls are cranking through, no divergence. I had so many advantages that I'm going to start looking for this look and see if it works its way into my plan. So I always encourage everybody, and I think I told someone to do this yesterday as well. Just go back. Go back and look. And while I'm flapping my gums, smalls above, larger wide, no termination conditions. There's a pullback directly to the mid-band right there at those. Right? So guys, it's okay. We're all on a path, right? We're all on a path to get to where we want to be. And everybody's going to show up at a different time. Somebody's going to get there on day 3 because who knows? Their life is just like, man, everything clicks. And then you take someone like me that's stubborn as all get out, and I'm going to fight the process as much as I can. And then you're going to get to a point to where you focus on the best of the best, and then you start to learn to read your charts. So you start looking at more and more. You start looking for more opportunities. You start saying, oh, the market was going up even though there was a termination condition. I should have taken that trade. That's that hindsight. Rules met. Rules not met. Guys, look at that termination condition. Beautiful. Textbook. No reason to try a long here. But if you did try the long here, you ready? Guys, here's the hardest thing for a new user to do. I feel like I'm going into soapbox mode. Don't let me do that. Check it out. Odds favorable, right? Rule number 1's met. I'm going long, especially because I didn't take advantage of these. Termination condition. My brain starts saying, well, you can do it because of the momentum. Break that rule, Mark. Your area is not inside of favorable large triggers. It's okay. Break that rule, Mark. And we have to train our brains. Here I have every advantage. Here I've given away the advantage of a clear path. And there's 2 very distinct differences, right? And that mindset will cause you to force trades. I had a gentleman in this room, and he used to annotate every chart with missed me, ugh, dang it, edited for young users there. Crap. And he would never say my rules were met or my rules weren't met. He would just say, well, the market went that way, so I must be the biggest loser in the world not taking that trade. I must be as dense as they come because the market went without me. Guys, this is such a dangerous trap to put yourself in because sometimes the market's going to move without you. And you have to be okay with that. We don't move the market, Nexgen users. These guys do. I love this picture. Mr. Shark. Guys, this is the deep pockets, institutional. These are the guys that control everything. These are the guys that create tops. These are the guys that know where those same Fibonacci levels are that you know of. These are the guys that create momentum. These are the guys that turn the market from the middle of nowhere. I can't be a shark, guys. I don't have that kind of money in my account. But what I can do is I can be a remora. I can let the shark establish momentum. I can let the shark not be in a fighting area. And I can use those rules, that consistency, to just get my scraps, $300 or $400 at a time. That's the guy that tried to be first, right? Jonathan, what'd you do? Jonathan said, everything's set up, Mark, so I went up in an area of support inside of favorable large triggers. So Exhibit A. And I love this. Jonathan, thank you for posting this in such a timely fashion. The Sharks cleared the area. The Sharks established momentum. The Sharks hadn't reached one of those areas where they're ready to take profits or add on. And the Remoras used a smaller, faster chart to pinpoint entry. And where is that? That is, I covered up the number. That's 54.25. So there's 2.5 points at the first trouble spot, and then another 5 coming in. 7.5 points being a Remora. Does that make sense, guys? And Gary, you bring up a great point. And guys, I am not a licensed psychiatrist. Let me make that very clear. But I deal with a lot of traders all the time. At the moment, it's having the confidence that I know the rules and it can apply the rules without flipping into emotional or revenge trading. Gary, you have 3 checklists, I believe. 3 different trades, 3 different checklists. And if there's any uncertainty at all in your ability to execute and understand and see these rules at the drop of a hat, perhaps, and guys, I never tell you how to trade. I don't give trading advice. That's not my job. My job is to teach you to read indicators. And sometimes I'll share a story based on conversations that I've had with traders. You can either take something out of it or not. That's up to you. But if I can't keep up with all the rules that I've created for myself, my best option may be to follow fewer rules. My best option may be simplicity and to start making money with one set of rules, to start always catching one particular trade that creates a statistical advantage. And then when I'm making money consistently, well, maybe then I go to the Discord section. And guys, I know this is crazy talk. Maybe then I go to the Discord section and I go to those trading rules and I say, well, I'm nailing the trend trade and I'm really good at this. I'm going to start that process over, that process of definition, that process of a checklist for entries, and that process of taking pictures over and over and over again. And now I'll add a second trade. So guys, do with it what you will. Totally up to you. But if you're not making money consistently, if you're chasing, if you can't keep up with your rules because there's too many and there's too many different looks, simplify. Ed, 2 funded accounts, that's all? You're on the low end, my friend. Ron says second place sometimes means first loser here. Second one may be the only winner. That's true. Sometimes a trade isn't going to work right off the bat. But you have to keep your head about you, rules met. And figure it out. Cosmo, you got your screencast. Nice job, man. I knew we'd get you there. So this is your ES, and you want to compare it to mine? Don't be in a hurry. Guys, there's a lot of wisdom. Cosmo, how long have you been running software? Two days? Okay. Because I do have a synthetic fib that you don't have. Let me take a look at yours again. Have you turned off your NinjaTrader in those 2 days? Because we look very similar here. Okay, we look very different here. Couple things that I like to check just to make sure. When I have something like that discrepancy, a lot of times, I'll check my data series and make sure that I'm 10 days back. I'll also go in and sometimes just reload a template and let it run that fresh a little bit. And that'll usually square things out for you. So guys, there's that resistance held, right? All the way to support. And guys, here's the biggest thing. Are you ready? I mentioned it once today. We trade patterns. Everything the market does is based on patterns, guys. It's fear and greed. Patterns, patterns, patterns. I want you to look at this picture from the current S&P. All right, I'm going to post this one in the room. That's the current S&P. Now I'm going to go to the tutorial section, and I'm going to go to termination conditions. Does anyone see a similarity here? Do you see how you can begin to recognize patterns to create an advantage? It doesn't mean that there's a trade to be had, but look at how similar this one from the manual from 2021 is from the absolute current situation in the S&P. We've reached the area, it pushes all the way back, and then it retests the area, and it's giving us one of those pivot stop outs, isn't it? No more long trades, guys. Not if you're a rules follower. All right, so there's the S&P. Here's crude oil. There's one of those pivot stop outs. Didn't come from an area, did it? Price pulls all the way back to support, exceeds it. None of my trigger lines break through. Snaps right back to those large triggers. Look at the difference in trigger lines as we get to that magenta high. Everything rolls. There's your first opportunity, potential momentum. Not a good one though, but now look at this. Small's below the large are wide. What do your rules say about divergence? Divergence printed, are you willing to take a short from an area inside of favorable large triggers? Or are you saying to yourself, I'm taking a more conservative approach right now and that divergence is a deal breaker for me? It's only one or the other. Either your rules are met or not. If you took that short, got in at 97, you've probably already made your money and are at zero loss level. This is that context piece that was being discussed earlier. When you have a termination condition and it creates a full reversal and it gives you odds favorable and your window is tiny and your momentum is strong, this momentum carries things. Even if it's a retest of the low, this much momentum begins to create a little bit of an advantage. Guys, it is the 11 o'clock hour. I'm going to take just a minute and I'm going to go wet my whistle. If you take a trade, post it. Guys, if you have a question, post it. While I am on this short little sabbatical, do me a favor. Start reflecting over your plan. Start reflecting. How many trades are you looking for? How often are you winning those trades? Would a little consolidation, would a little focus do you some good? Would eliminating a trade or two? Because guys, remember, more trades doesn't mean more money. $100 trade on a one lot is $100. That same $100 trade on a 10 lot is $1,000. And then when you're taking that super consistent $100 trade over and over, guys, maybe better trades, more contracts instead of more trades, fewer contracts. I've heard that before. Small's below the larger wide, angled in the direction of the trend. Guys, look at this. There's a limit order just below my window of opportunity, right? Give me a why in the room. Is this a rules-based trade? Can I feel good about it? Do I have the advantage of momentum? Do I have the advantage of no termination conditions? Do I have the advantage of an area of resistance inside of favorable large triggers where the market is likely to continue? If you can't give me a why in the room, I need you to take a picture of this. I need you to tell me why you don't think that's a high probability trend trade. I'll be back in just a second, guys. come back. I canceled that one because I think that an order stuck. I thought I canceled it out. But from 85, that's a 97 stop, isn't it? Probably could have just. And now we're looking to see what's going on with trigger lines. But guys, that's exactly the whole thing. Either your rules are met or your rules are not. And that's what you have to be able to determine. Whether or not your rules have been met. Whether or not you had the advantages in place. And if you had the advantages in place, you become obligated to take a trade. That exact setup 100 times. The odds are favorable that I'm going to win 70 to 80 of them, right? What's the other side of that equation, guys? 20 to 30% of the time, I have to be mentally and financially prepared to take a loser. I have to be in a position to where I'm okay not winning a trade, even though everything was right. And guys, this is why you have to post in the room. This is why you sharing your pictures is paramount. And I'm going to show you why right now. Did I have a good top or bottom? I had a termination condition that created a full reversal that gave me odds favorable momentum. Let's change colors here. I had odds favorable. I had absolutely nothing in the way. And I had the tiniest little window of opportunity, right? Give me a Y in the room, guys. Did this one fit the rules? Is this a trade that I belonged in? Is this a trade that fit my plan? Anybody? Gary took the 50-50 with divergence, made some money. Nice job. Guys, it fit the plan, didn't it? Joel, let's see what you did. Joel, that is crude oil. Pivot stop out. There was the 50-50. Coming in. Pretty picture. Paul would take this again anytime. That's what I wanted to see. Why, guys? Because it fits the rules. Because it fits the rules. Because it has every advantage that has been proven to win more than it loses. Ed says it's still right. It's just pulling deeper, right? So what's it doing? Guys, based on the trigger line location, is 78.98 likely to stop the market? Absolutely. Has everyone gone to chart reading and seen that picture that when you take the perfect trend trade and it doesn't work out? Well, this is a little different look. Let the triggers roll. Let things get back in. Let all three triggers agree. No, and what was the potential of that trade, guys? 65 was your first stop, right? $200. And if it really was a trend changer and it was going to keep down, 78.42. And Paul, you said you were on house money. You got in, took a quick profit, and then had to manage out for a few ticks. Guys, there's a trust level that comes through practice. There's a trust level that comes through repetition. And to trust something means that you believe in the strength or the consistency of, right? Cosmo, you're on day 2, right? So the first hour of class, Cosmo, right on. The first hour of class is 100% dedicated to the high probability trend trade. Focusing on one trade with 3 rules. And I spend a lot of time going through it. And if you want to, when the day is over, go back and rewatch the first hour of this classroom. I go into each and every rule in great detail because one of the things that we do, guys, everything is a foundational approach. So if you're not sure what you're looking at, well, then you're probably not going to understand the rules. And then we break the rules down into each section one by one through pictures, whether it's momentum, whether it's termination conditions, whether it's entry. We put the three together. We talk about the advantages. We go back and we teach you how to study. How do I go back and look over so that I can develop faith in the rules? So it becomes this process. And Cosmo, I'm going to show you something real quick. This used to be one of my favorite pictures because this is how I felt. So much that it's actually saved on here. Cosmo, that's me learning the rules on day one. It's this flood of information that just comes at you. But if you take a second and you allow yourself to be new and you give yourself the opportunity to come through and kind of slow roll it, ask a lot of questions, let yourself be a student, you can start in the self-training. This is everything that I cover, and this is a great roadmap. And there's really one path more than anything that's going to get you to where you want to be, and it all revolves around participation. It all revolves around you being active in your education. I'm going to show you guys this picture. Here's your path. And this isn't just for Cosmo. This is for everybody. But Cosmo, you're on day 2. And I just want to let you know that everybody in this room was on day 2 at one point. And they're still here. And they're confident and they're capable. And you're going to be in that exact same boat. And this is the path to get there. Post your trades in class. Post your questions in class. Post your comments in class. I go to great lengths to never seem put off by any questions. And I answer the same questions over and over. And I like it. It makes me a better trader. And then track your performance in the real-time spreadsheet. I showed this once. I'm going to show it again. This is one of those spreadsheets that one of our users was nice enough to share with me and then give me permission to show it to you guys. And I actually took a picture of it. Here we go. Guys, this is our tracking sheet. On simulation, on market replay, the trades that were taken, the way, the feelings getting into the trades, notes on each one, whether rules were broken, whether rules were followed, talking about targets, what worked, what didn't work. Guys, this is your path. And her spreadsheet won't do you any good because this is her trade. This is her approach. But if you approach your spreadsheet with this sort of detail, if you are adamant about filling out that spreadsheet, giving yourself all of this feedback, all of this personal reflection, you're going to develop pattern awareness. You're going to be able to understand what works for you, what doesn't work for you. You're going to understand where you tend to break rules and where you tend to follow rules. I do the same thing with you in this classroom, 15 hours every week. When you post pictures in the room, I begin to recognize when you're following rules, what rules you are adamant to follow, and which rules you really are okay fudging a little bit. We have a conversation. Nothing I say is gospel. It's all observation based on indicator reading. That's what I teach. But if you really want to get to where you're headed, where you told us that you want to be, this is it. You need to participate in class. You need to use that spreadsheet. And you have to learn the rules for when it's okay to trade. You're going to learn those rules through study. You're going to learn those rules through repetition. You're going to watch videos. You're going to ask questions. You're going to reference the user guide over and over again. Simulate your trades. Post the pictures in class until you're sure you have the correct rules. Your rules are going to change as you change. It's important that you understand that. But if you're focused on the 30 days learning to read your indicators, the rules should be pretty clear. They should be very concise. They should happen on 2 charts. And Ed's exactly right. Post your losers. Guys, winners are great, you know. Winners are great. Losers are where we learn. Don't practice the wrong trades, and you're gonna practice the wrong trades because you don't know the rules yet. Let me help you understand when they're correct. Simplify. Simplify. Don't chase everything, guys. Chase the best. Use your market replay. Fix your mistakes. Take pictures. Post them in class. And repeat this process every day. Guys, I'm 100% committed to helping you through this process. If you do your part, if you post charts, if you ask questions, if you participate, guys, I will never give up on you. I absolutely promise. But you have to do your part. You're not going to become a professional day trader sitting on the wall doing nothing. All right, there's my soapbox on your path, guys. Safia, can I please discuss short downward trade? I seem to lose majority of the time. I'm not sure when to get in. It's not a dumb question, is it? It's an amazing question. How do we recognize an entry? I'll tell you what, we'll use this one. A lot of you guys caught this one. What's it start with, Safia? Actually, we'll go this way. We'll do this chart. I'm okay posting this one because this one had a distinct statistical advantage. All right, Safia, are you ready? On the 13-2 chart, rule number 1 says whether it's up or down, right? Let's go back and we'll reference the manual too as we do this. Rule number 1, whether it's up or down, says that we have to have odds favorable momentum. Yes? That's what gets us going on the 13-2. Is rule number 1 met on my 13-2 chart, Safia? Or anybody in the room? Cosmo, can you see it? Small's below the large, larger wide. They're angled in the direction of the trend. Everything says this market is likely to continue in the direction of the trend. So rule number 2 says no termination condition. Safia, it doesn't matter whether we're going up or down. Have we reached a Fibonacci area on my 13-2 chart? Anybody? No. So rules 1 and 2 are met, right? Cool. So guys, when rules 1 and 2 are met, on the 13-2 chart, I love this. This is one of my favorite drills to do, guys. And you can do this on your own. That 5-1 chart's screaming down, isn't it? Look at it go. So Safia, Cosmo, anybody, if I go to the manual and I look at pinpointing those entries and they show them for a long, what am I waiting for to define my window of opportunity? Everything is going up or everything is going down. I'm waiting for a very specific bar. Safia, do you remember what it is? Or anybody? No, we're looking for what's called a reversal bar, meaning that after all of these down bars, and guys, the wick forms, here we go. I like this. This is a good lesson too. This wick forms when price goes below the midpoint of the bar and then continues back up. That's what forms these wicks, whether it's a 13-2, whether it's a 5-1. But what we're looking for is with all of these down bars, I want a bar going the other direction. And it will, by default, have a wick. So here we go. We're going down. We're going down. Oh, it tried to fool us, didn't it? It started up and then headed back down. Here we go. Boom. So there's your reversal bar. I have the advantage of momentum. I have the advantage of no termination conditions. And now I have a reversal bar. Something that says that the market is going to give me that pullback. So let's identify the window of opportunity, guys. The first thing I'm looking for are favorable large triggers from the top of those triggers to the bottom of the triggers. Are you with me so far? I want to make sure that these triggers are favorable, that everything says down, that we're good. Awesome. And my window of opportunity is going to go from the lowest point of resistance to the highest point of resistance. And this becomes the area where the market is likely to continue, where statistically, if I take this trade 100 times, more than likely I'm going to win 70 to 80 of them. So my job now is to right-click and activate a sell limit, and hopefully the market off screen isn't doing anything. So Safia, a tick or two below that window of opportunity. I've now activated. Oh shoot, it filled me. Sorry guys. Apparently the market's trading right where we are. That happens sometimes. Oops. So I'll use a line instead then. Couple ticks below. And all we do is wait now, right? Waiting for the market to come up. Guys, a tick or two below that mid band. There's my entry. 70 to 80% of the time, I'm in love with this trade because it gets to my target. 20 to 30% of the time, no, that's okay, John. You do it at your pace. I'll be here whenever you have a question. Guys, that one took us out. Even with the advantage of momentum, even with no termination conditions, and even with an area of resistance inside of favorable large triggers. But you can do this over and over, right? Let's do it again. Let's assume that the rules are met on the 13-2. You ready? This is for the new folks. I'm going to load a template. Guys, all we're doing is identifying entries. Don't overthink it, engineers. Let's get rid of these drawing objects. I'm going to try and make this. All right. Are you ready, guys? This is new again. So we start again on the 13-2. What's rule number one, guys? What am I looking for, and do I have it? This is where I will embrace the silent, awkward moment until somebody answers. Joel says rule number one's met, right? Odds favorable momentum. Small's below the large and the large are wide. Rule number two says no termination conditions. Is rule number two met? Have I reached an area that the trigger lines have remained above? Exactly, Walter. There's no termination conditions. So if I take a quick picture, and this is what I'm saying in my head right here. Right now, I have odds favorable momentum. I have no termination conditions. Go to the 5-1 and refine for entry, right? That's it. When the rules are met, I'm done with that 13-2 chart for now. I have the advantages I need to look for a trade. So guys, here's our 5-1. All these down bars, triggers are way up here. What am I waiting for? What do I need so that I can start looking for my window of opportunity? Market's going down, bar by bar. We're thinking about it. What do I need? Reversal bar, Rob, exactly. I'm going to run out of room here. Keeps going, doesn't it? Oh my gosh, it's going to go out. It's going to go without me. Oh, Rob, there's your reversal bar. Safia, there's your reversal bar. Are my large triggers down and strong? I like the look. Yeah. So let's do this again. Let's identify the large triggers. There they are. Where's my window of opportunity? Can you guys see those numbers well enough? Who wants to give me a potential window, guys? There's your window. It's 3 ticks wide. 78.91. Oh my goodness, Safia, that's all the way down here. Is that an area of resistance inside of favorable large triggers? $79.01. Let's see where we're at. So $79.01. Because Cosmo, this is historical. This happened at 11 a.m. Right now, we're working on entries. We're not looking at the live market. We're looking at learning how to identify an area of resistance. So Walter, 79.01 is on the other side of resistance. It's on the other side of that mid band. Our rules say we're going to put our entry a tick or two below, right? So how do you guys feel about 78.97? Rob A., you said 78.97. And your stop would have to go up really above those large triggers if you get filled, doesn't it? If I have a 97, there's 12 ticks right there. How do you feel about it, guys? We don't even know if we're going to get filled. All we've done is identified the window of opportunity. Small's outside of the large, larger wide coming down. Let's see if you guys at 97 get filled. Boom. You're in a trade. 12 tick stop. Uh-oh, it's going against you. Dang it. Should we jump ship, guys? We have a statistical advantage. Oh, there's that reversal bar. Let the stop work. Now we have a bar in the direction of the trade, right? Watch this. Let's reduce risk. 2 ticks above. I went from 12 ticks to 6 ticks, right? You can see my stop. You can see my entry. Do you guys remember when we talked about that really conservative approach that has you looking for profits at 100 and 200? So if we're in at 97, guys, here's my profit targets, these lines. First target reached. Congratulations, Rob. You have $100 in the bank, and you just moved your stop to break even. Absolutely nothing can go wrong with your trade, right? Next target's at 200. Does it make it? We don't know yet. Every trigger is down. You have momentum. There's nothing in the way. Congratulations, Rob. You just made $300 on the trade. You identified momentum and when it was advantageous. You identified no termination conditions, so you had a clear path. And you identified the area of resistance inside a favorable large trigger, so your entry was at the area where the market is most likely to continue. Safia, everybody sees things differently. Does that help a little bit, seeing it go down? At this point, I'm out. My plan says, because I'm a brand new conservative, don't want to insert my emotions into it. Whoops. Here's my plan. This is my management plan in the beginning, Rob, until I learn how to read my indicators well enough to really manage properly. Take the money. I'm in this to make money, guys. I'm not in this to be cool. That ship sailed a long time ago. Hey, Future Travel, nice to see you. So now we go into the live market, right? Let's put our indicators back on. And while those indicators load, so Safia, your entry should be a tick or two either below the resistance or above the resistance. depending on whether the trade is long or short. If you're going short, it should be just below. If you're going long, it should be just above. Ed says that the content is unavailable. Ed, I'm going to try it one more time. Not working for me. Oh, looks like you redid it maybe. Content's unavailable. Ed, you're getting sneaky. Ron C., this is your plan. Pray, wait, trust. I love it. Just wait, guys. Because if you're patient, it's going to happen, isn't it? We've watched it all day long. You can keep yourself out of trouble by not trading in determination conditions. You can give yourself advantages by making sure that you understand when you have that odds favorable momentum. Cosmo, are we all good? This is the S&P live now. We were doing historical on crude oil. If you just walked in, you're like, oh my gosh, this doesn't look like the market. Guys, that's going to happen every now and then. It's okay to be vocal. Let me know. Right now, we're looking at the S&P, right in determination conditions, right? No momentum, no clear path. Guys, this is what I lovingly refer to as the go make a sandwich pattern. Support held, resistance held, support held, resistance held. Mid-band held, the large triggers didn't follow, resistance is holding. Guys, there's just nothing to do. Bagel bars, 90% of what you do is going to be waiting. 90% of what you do is just reading your indicators, guys. I know people that listen to music. I know people that play video games. I myself typically have a sketchbook. I'll sit and scribble. I'll do anything other than allow my brain to fabricate a trade. There's two options in my world, guys. Either my rules are met 100% or my rules are not. And that's it. And when you embrace that, when you stop chasing trades and using that phrase, ooh, this phrase bugs me. When you stop saying, well, it's just simulator, so I'm going to try it. It's just simulator. It's not real money, so I'm going to develop bad habits. Don't chase trades, guys. Have a plan. Be specific. Understand that it's the process that gets you to where you want to be. Gary, you said that you had to respect flat triggers. No trade? Can I simplify that for you? Respect termination conditions, right? Rule number 2. I personally don't have any rules that discuss flat triggers. I have rules that identify momentum, that identify termination conditions, and if the rules are met, that identify the best of the best spot for entry. So if I'm looking at the triggers here, I understand that there's not momentum. I also understand that there was a divergence and that they're working their way inside. But there's nothing flat. They're very, very vertical as it reaches that area. And then if you look at your checklist, you're just looking for that continuity. Does that make sense, Gary? For me, it was more the termination condition. I'm not a fan of trading in determination conditions. And there's times when the context says it's okay to take that shot. Right on. I was reading what you wrote on the charts. A lot of times your checklist confuses me a little bit. Let's look at it though, and let's teach me to read it. The red X, 50-50 trade with divergence, but it's not a 50-50. It's a termination condition. Right? Okay, so the red X up here, termination conditions on the 13-2. I gotcha. I'm with you now, Gary. Thank you for that. maybe a good exercise for all of us is when you're going through your checklist, what it'll take to get you in, and you get a red X, right? Uh-oh, I've got a termination condition. Just stop. Get in the habit, when your rules aren't met, stop looking for a trade. And this isn't just for Gary. Gary, you're nice enough to post a checklist on the chart. This is kind of just a thought. If your checklist says, this is what has to happen to get in, right? And this is a no, stop looking. Because I promise you, you'll find a reason, won't you? You will find a reason, guys. Well, it's a termination condition, and I don't have strong triggers, but there's a mid-band inside of favorable large triggers, and the small triggers are outside. I should probably be in a long position, right? What do you guys think? Is that a high probability trend trade? The answer is hell no. Nobody wants to answer. No trade, exactly, Gary. Because I don't have momentum. And because I have a termination condition, guys, who cares what the 5-1 says? Doesn't matter. But you'll get to a point where if it's been long enough since you've had a trade, you'll say, well, I'm willing to give up the advantage of momentum and the advantage of no termination conditions, and I'll take that trade based on a small chart because I just want to be busy. It happens. Trade or no trade. That's it. Trade or no trade. Guys, what do you want to talk about? We have a little time left. I have officially reached the point of the day where I'm rambling. And I'm getting better at recognizing when I ramble. And the great thing is if for some reason I don't recognize it, John Novak sends me a loving message. So what do you guys want to talk about? Safia, do we get you cleared on the shorts? You feel pretty good about them? Just like the longs, just go in the other direction. And the cool thing is, you guys may not know this, Safia, Cosmo. So that spreadsheet that Nexgen provided you, if you go to the client trade examples, watch this, Safia. You want to study the look? There's Luciano's perfect trend trade short. What did it look like? You can literally go to your spreadsheet. Here's Gary's perfect trend trade short. It looked just like Luciano's, didn't it? And it looks just like the one that you're going to take, Safia. Here's Michelle's perfect trend trade short. Guys, these are all Nexgen users. Oh, that's a long, not a short. I messed that up. But isn't it the same? Strong triggers. No terminations, that's a 50-50. No divergence, tiny window of opportunity. So Safia, you guys have this tool, each and every one of you. Look at the spreadsheet. Get visuals of the rules being met, guys. You don't have to go this alone. Gary, let's see what you did, my friend. Absolutely. No trade for Gary. Safia, I say you don't incorporate a third chart until you're comfortable taking the trades on the, because until you're comfortable with rules met, Well, Gary, you don't have a termination condition coming from a Fibonacci area, so the rules aren't met for a high volume area setup. What you do have is divergence on every chart. It may turn, but not rules met. Safia, when I get comfortable with my rules, when I can take the time, no worries. When I can get in and out of a trade, when I'm starting to learn to manage it, stuff like that, that market flow chart, I'm a fan. I'm not going to lie. I like the market flow. But people will use market flow to create trades rather than letting it be a confirmation, rather than letting it validate and verify the information that the rules have already provided you. So when you're comfortable with your rules, I love it, because if we look at Gary's picture here, Gary, thank you for posting so much. I feel like I use you as an example a lot. The look looks good on a 13-2, guys. And then Gary recognized, well, I've got a slowdown. I've got a second divergence. I've got the small triggers working inside. And then Safia, he looked at an 8 range. And while this isn't a long trade, this is a reversal bar with weekend triggers with a breakout bar after it. And Gary said, I'm losing advantages at this particular area. And sure enough, he was losing advantages at that particular area. The market does reverse. It comes up and it gives you a pullback. Not really an area for entry from a high probability standpoint. But then you start working those advantages in there. So learn your rules. I would say if you don't have market flow yet, and Gary, I love it. So many great conversations. Build a market flow chart and start just like this. Here, let's do this together. Let me pull up my control center. And I'm going to make a new chart. Is this crude? This is crude. And I'm going to build a market flow chart real quick, guys. And I'm going to show you what I think is an amazing way to use it in the beginning. Let me pick my... All right, I've got one building over here on the side. But I'm going to show you how I used it initially and then work my way in. Paul, divergence, divergence. Everything is suggesting that this is an area that's going to hold. No divergence. You take the pullback with the full trigger roll all the way across. Nice trade, Paul. Great chart reading. All right, guys, this is an 8 range chart. This is a market flow chart. Confusing, isn't it? Whew, that's a tough one. So if I take that same 8 range chart and I take market flow off of it. This is how I think is one of the best ways to use it initially. Everything says down. With odds favorable momentum, the market tends to go down. Everything says up with odds favorable momentum, right in. I'll start using an 8 range chart, guys, just to verify the momentum on my 13-2. There's traders that use nothing but an 8 range chart. Resistance reached, triggers roll, pull back to the midband of the triggers, and take it all the way to the area of support or all the way to the outer bands. So use it as a confirmation. What do the trigger lines say right here? We'll work backwards. Small's above the large and the larger up. I have momentum. Large triggers are moving up. It can. Just uses range charts. SIVA uses just range charts as well. But you can use it as that confirmation initially. Let's just confirm the momentum, right? Let's just make sure that we're in a good spot as we go into trades. Yeah, and Paul, I love this. Notice Paul put everything has rolled. Paul's not trying to be first. Paul's letting his indicators tell him that the market's likely to change direction. It does it with these triggers. It does it with the 8 range. And look at the momentum on that 8 range chart. Look at the momentum on that 5-1 chart. Look at the momentum already established on that 13-2 chart. Paul, this is a great read. Now we have those large triggers that couldn't make it through, right? Didn't that qualify as 50-50? There's your divergence. Putting those patterns together is good. Establishing the advantages and then being able to act upon them. All right, guys, what do you want to talk about? This is crude oil. Dancing a little bit for us. What's the S&P doing? Termination conditions, right? Now we've got a full reversal. Now we have triggers rolling. Guys, exhibit A. If the top is really going to be a top, guys, here's our first hit on resistance. Here's our second hit. Here's our third hit. There's your fourth hit. Now the triggers roll. And oddly enough, now the market is continuing down. Paul, did you take that momentum style down to the mid-band? I bet Claire caught it. Too early for you? Awesome. Every trigger rolled. Every trigger on every chart said down. All 3 triggers agree. There's your stab back. Pretty cool, right? So we've already reached our target. There can't be a next one. Now you're looking for a high probability trend trade. But look at that patience piece. If all you did was wait for everything to roll from the top, there it is. Isn't that awesome? The difference between really successful and traders that struggle is what you do in those in-between times when the advantages aren't present. Are you taking trades because you're bored? Or are you waiting for those advantages because your money's important? All you have to do is post your charts, guys. We'll talk about everything that we see. Sitting on your hands. All you have to do is post your charts, write your rules on it. We'll talk about it every day and get you where you want to be. As we have a termination condition that created a full reversal that has provided odds favorable momentum, we're into a mid-band, and I don't have any areas inside of favorable large triggers. In 60 degrees. It's 29 and cloudy here. Ron, I'm a little mad at you right now. Thank you. It was a fun class today. A lot of great questions, guys. A lot of information. I played golf yesterday. 32 degrees. No point. I'm jealous. It's just jealous. That little green-eyed monster coming out. Guys, I literally had to push my golf ball off of ice in the fairway over to grass. And then the grass was like concrete. Everything was frozen. Couldn't get a tee in the tee box. I had to keep stabbing until I could find a spot soft enough for it. You ever see the videos where they're playing in really cold weather and they hit it onto the pond and it skips over to the other side? I did that yesterday too, just for the fun of it. High of the day. Brr. You can have it, Gary. You can have it. All right. New users. You guys on demo. Howard E, Buck Blue, 000, Ronald, Rodenizer, Ravi, 75. How we doing today? How you feeling? I know it's a lot in the first day, but it gets a little easier every day. McFamily 08, how we doing? Talk to me, guys. Yeah, NG time, when the fairways are frozen, the ball rolls. I had my best drive ever. I went 280 straight up the fairway. It probably rolled 100 of those, but I took it. Felt good. Doing well. I like it. Rob A, keep asking questions. Keep participating. We'll get you exactly where you want to be. And that goes for everybody. I've never had anybody put the effort in. I've never had anybody follow the checklist. I've never had anybody posting pictures, asking questions that didn't end up where they wanted to be. People typically go sideways when they abandon the process, and that's when the challenges happen. Simplify. Keep it simple. Cool. So, Gary, you want to make enough money to move. I like it. And Gary, you are giving me so much inspiration today. I want you guys to focus on the process, not the money. Okay? The money typically comes when the process is followed. When I started golfing again, I'm going to bring it back to golf again. Analogies work for me. I couldn't hit the ball. And I told John, I said, I'm going to buy a new driver. This one doesn't work. Because it was the driver, not me. And then I still couldn't hit it. I was like, well, I need new irons. If I had better irons, I'd be a better golfer. Got better irons, and I still wasn't any good. I bought some really expensive golf balls, couldn't hit them. I bought a couple wedges, couldn't hit them. I bought a new putter, couldn't hit it. And my brother told me for the 27th time, and I hope this isn't offensive to anybody, he goes, it's not the arrow, it's the Indian. I never worked on the process. That's it. It's the golfer. I never worked on what it takes to have a solid swing. I never worked on standing up straight. I never worked on keeping my head down, keeping my elbow in, all those things that you put together in order to have a swing that produces results. Everything that you have to put together to produce results. Guys, the rules are great. They don't mean a thing if you don't follow them. The software is amazing. It doesn't mean a thing if you don't take the time to learn to read it. So focus on the process. Focus on giving yourselves the best of the best. Keep it simple, guys. One trade to learn how to read your indicators. And then when you learn to read your indicators, don't feel like you have to create another 50 trades. Use the best of the best. All right, guys, that's it for me today. Great day. I'm going to go get my trading day started. I'm going to follow some rules this afternoon. I'm going to take the best of the best. I'm going to see what the market has in store for me. Guys, thank you for being here. Demos, new users, thank you for being here. Guys, it's the last day of the month. I always like to say this towards the last day of the month because this is where everybody's like, okay, this is where it's time for me to commit. When I was 23 or 24, 23, I moved to Colorado with the intent of learning to snowboard. I left everything in Austin, Texas, packed up, and moved to Colorado with a couple friends. And the first thing I did when I got there is I bought a snowboard. Had never been snowboarding, had only been skiing once. But I told myself, I'm going to learn to snowboard. And I made that commitment right there. I made that financial commitment to something that I said that I wanted to do. And guys, by the time I left Colorado, I was pretty good. I practiced. I hung out with people that were doing it better than me. But the biggest thing is I committed. I bought the snowboard. I couldn't return it. So I was absolutely 100% focused on getting the most out of that snowboard and using it and having a great time with it. Guys, commit to the software. Demos are awesome. The education doesn't change day in and day out. We're committed 100% to you guys every day that you walk into this room, every time you send an email, every time you make a phone ring. Embrace that commitment. Get your software, make it yours, and let's get you where you want to be. Guys, have an amazing day. I'm going to shut it down. I will see you tomorrow, 9 a.m. We're going to do it again. And we're going to do it every day until each of you reaches your goal, gets to where you want to be. If you have any questions, Guys, the room is yours for the next 24 hours. You're welcome to post in here. I'm sure John will pop his head in. I'll probably pop my head in. But class is officially over until 9 a.m. tomorrow. Take care, everybody. I'll see you in the morning.